A few recent economic reports, namely the inflation reports, which show that inflation is coming in a little hotter than expected. So overall inflation, there were two reports last week, and it showed that overall inflation is coming down, but it's not coming down as quickly as investors have expected. And this has been a few reports in a row where it's kind of fallen short of expectations. So if inflation is not meaningfully falling to that 2% level, then the Fed, doesn't have that leeway to start cutting rates yet. So that's kind of where we're at right now.
Welcome to Reporter's Notebook, where we talk to the Washington Examiner's top journalists about the stories breaking on their beats. I'm Jim Antle, and I'm joined today by economics reporter Zach Halaschak. Zach, what's going on with mortgage demand right now?
Yeah, so mortgage demand fell off pretty heavily just this past week. I think it was off by about 11% just in a week alone. And the big reason behind that is because mortgage rates are rising. For a while, they've been kind of falling steadily since maybe October, November. That's because investors were thinking that the Federal Reserve was going to start cutting rates sooner rather than later. Just like a few weeks ago, most investors were saying March will probably be the first rate cut.
Sure.
Now it's looking more like June or even later. And I know there's a very small minority of investors are even talking there could be a rate increase, which no one would have thought a month ago. And the reason why that's happening is because there's been a few recent economic reports, namely the inflation reports, which show that inflation is coming in a little hotter than expected. So overall inflation, there were two reports last week, and it showed that overall inflation is coming down, but it's not coming down as quickly as investors have expected. And this has been a few reports in a row where it's kind of fallen short of expectations. So if inflation is not meaningfully falling to that 2% level, then the Fed, doesn't have that leeway to start cutting rates yet. So that's kind of where we're at right now.
So, the thought had been, and the reason there had been all the talk of interest rate cuts happening so early in this year, is that maybe we'd turn the corner on inflation, but it stayed fairly persistent.
Yeah, obviously the Fed's goal is 2%. We're just over 3% now. And it's kind of hovered in that 3% range for a few months now. So for a while, most of last year, it was really trending down from that, over 9% notched in June 2022. And it came down pretty quickly. So now it's kind of that last phase, it's just kind of sticky there.
Sure.
And it's just proving stickier than expected. So they really want to see that moving closer to the 2% goal to feel that confidence to begin cutting rates. Because the last thing the Fed wants to do is have a repeat of the 70s and 80s where, they raised rates up and then they decided to cut and then it went back up and inflation was another problem again. And it would be terrible for the economy, kind of a double whammy, if you will.
Sure, and in an election year, no less.
Absolutely, yeah, that would be very bad for the president and for, the economy at large.
So what's in your wallet? There's this big merger that is possibly going to take place. Walk us through that a little bit.
Yeah, so Capital One is trying to buy Discover, which is the fourth largest credit card in the country. So there's four large companies basically that operate within the credit card realm. There's Discover, American Express, and then the two big ones, Visa and MasterCard. Capital One, so to break it down a little bit, Amex and Discover are different from Visa and MasterCard in that they own both the bank and the credit processing software.
Sure.
So if you have a Discover card, it's all through Discover. It's not through Wells Fargo using Visa or Bank of America using MasterCard. So with MasterCard and Visa, those are used by all different types of banks. Capital One,
which is one of the reasons why they're more universally accepted.
Yeah, correct. And so what this could do for Discover is make the card a bigger competitor to those like Visa, MasterCard, Amex, because it'll put the institutional backing of this big bank, which is Capital One, behind it, which would allow it to maybe make the competition a little more fierce among the credit card companies. So yeah, it's a pretty big deal. It's yet to be seen whether it actually goes through, though. The Biden administration has been very big on antitrust.
Right.
And, you know, anytime you have a merger of this size, it's going to face tons and tons of scrutiny. And it's going to take months to even, I think, determine whether or not it'll be accepted, because it's just going to have to go through so many sets of eyes.
Has there been any criticism of this potential merger?
Yeah, there has, from the usual suspects. Elizabeth Warren specifically. She came out and just said it should straight up be blocked. Hasn't really elaborated much more on that. It was on a tweet where she said that. And then Sherrod Brown, very powerful senator, he also released a statement, but he didn't say it should be blocked. He just said it needs to be very closely scrutinized, and, you know, it needs to have all those sets of eyes on it.
We'll have to discover what's going to happen.
We will.
Thank you, Zach.
No problem.
You can read Zach and the rest of our policy team's coverage at washingtonexaminer.com.